Welcome back to the channel. Since today is such a huge day, my live account actually started I think yesterday, Thursday, or on Wednesday. I think Thursday. And my first live trading session was actually today, right? So it was real great to see how we did, right? And to see how we can correct the mistakes that were made, right? There were some jitters, so even though I practice, there's still a little bit, some little jitters, right? So, alright, so this is it. What we're gonna look at is we're gonna look at the trade history, right? To see what actually happened. Okay. Alright, so first of all, let us just take a look. Let us discuss pretty much what happened in the market, right? Alright, so I mean, if you check my last video, then you would have seen we're trading spot gold, right? We're using lot size 0.10. Okay. Started with a $250 balance, right? We knew that the market pretty much was in a channel, right? And we had a line here before, our resistance line, so it was bouncing in between here and this, and the resistance line we had initially drew about right here, right? So it was bouncing right there. Alright, so it would have been here, the resistance line we had previously was right there. Alright, so I got a little bit spooked initially, right? And I see if we can pick it up here. So I got a little bit spooked initially, and I think I went into the trade here, right? We'll go to the 5 minutes time frame. Alright, so I went into the trade. I sold here it was $6, which is a sell. Came back on me and stopped out my stop loss, right? Waited some more, flashed up, came down, right? I think I entered the trade maybe just about here, right? Was thinking at the time that probably I'm looking at close to $200, right? And wasn't paying at that time. I was doing it was an on video session, so I was doing the vlog at the same time and really wasn't paying attention. So I realized that, especially when the market is very volatile, right? And there's some risk involved, because it means that your stop loss has to be pretty wide, you know, because the market, if you look there, it's moving. You look at the wicks, it's really moving up and down. But after it went up and then came back down, you know, I had a wide enough stop loss. I think it was probably about 50 pips, right? It came down, and So it flashed down, and then I was not paying that close enough attention, because I mean the market's moving in front, came right back up on me, right? So it was up. If you watch the last video, I think it was up like $127, $130 thereabout. Market was moving fast. I should have just, I mean, when the market is moving fast like that, and you get a move, or even to capture a move like that, make sure you secure your money, right? I didn't do that, and the market came right back up on me. It would be here, and so I came out of it $27. So move from 120 between 120 to 134. Only came out with $27 because it came right back up. I moved my stop loss above my entry but this thing was just moving, and I wasn't confident if this thing was going to come and bring me back in the negative, so I came out. If I had held on to it, it would have been close, but I would have been able to ride it right back down. I didn't hold on to it. Alright. So that was that. Nonetheless, I as you can see right here, came back. I caught some selling, so I caught some of this in the latter part. Alright. So you see all those selling right there. I caught a couple right there. Where did I buy again now? So I started to buy, and I got stopped out somewhere. Where was it? I got stopped out again. I think the market. Right here, buy, and it stopped me out right here, right? So I lost $32, but what I realized after a while that when I looked back at there's always one thing you should always, based on my style, you should always pay attention to your 1 hour chart, right? And I realized that it was taking some steps coming down, and so what I started to do is so I got some selling in right there, but then I realized the market was going up right here, right? And I took some it pretty much retraced itself, and I got back some cash out of it right there, right? And lost what, $30 I think at the top here. I bought and it came back on me. See if I can recognize what happened. Right, I think I bought it. It was right here. But again, the mistake I made, I was in the 1 minute chart, and you have to give yourself, for me, I realized in terms of my trading style, you have to watch the 5 minute, and the 5 minute gives you the movement to be a little bit longer, right? And so it stopped me out. The last trade that I made, which I probably shouldn't have, well, I shouldn't have, because first of all, it wasn't confirmed on the 1 hour, right? Because I was seeing the market is waving and it's coming back down, but it's not confirmed that excuse excuse me, it's not confirmed. It wasn't confirmed on the 1 hour. And even though 5 minutes told me that listen, this thing you know, be trending a little, so I sold, didn't have the confidence to hold it, right? And you know, I came back out, so I sold. I think I bought about here, and then I you know, I just decided to come out of it, and that's the loss. So this is the final sell here, but it actually came up and went back down, and you know, I correctly entered the market because I looked at the 5 minute and that showed that there, you know, there's a little bit of movement. So would have had a little bit of movement, but in addition to that, the market will be closing. It's a Friday, and the market will be closing anyway at 5 o'clock. So that was really a boneheaded entry. So pretty much, let us look and see what happened here. All right, so I was able to survive, but I don't want it to be like that. It's not a matter of survival, right? Because the key thing is that you want to keep adding buckets of milk. You don't want to add buckets of milk and then you keep down the buckets and then add buckets. Because some of the trades I was doing, it's almost like scalping one-to-one, which under the circumstances, I mean, if you're taking it going up and you didn't enter from early, fine, right? I can live with that because, you know, it's going in a direction and you know, you're just trying to catch the wave as you can, right? But you know, the aim really is to, you want to keep adding, right? And you don't want to have a situation where you know, you're adding but you're kicking down. All right, so what we're gonna do, so 250 started with 250 at 321. That's what, $71. All right, this was actually at 360 and then I made a boneheaded move, all right, about 350 something. So all right, so it's bad but it's not so bad. But look at this. So let's add up, let's check the money that we lost, right? And this will show a true picture of what's happening. So that's $7.90 plus what's this, $30.90 plus $32.40 plus 60 cents plus $6.30. Alright, so all of that, that's $78, right? So I, on the $250, right, on the $250 I made a profit of $71.40, but I also lost $78.10, right? So that's basically, I could be at 100, so that's half of the money that I could have made up $140 pretty much. That's what it's saying right there, right? So these are the things that we're trying to eliminate, right? And you know, just pay attention to when you're entering, because that is key. Because you can you know, be entering correct directions, a bullish market or a bearish market, but your entry is just not right, and that messes you up, stops you out, messes you up, right? So I would call it an average day, although I made $71, and that is what, 3 sets 21, 4 sets 28. So call it, yeah, just about a quarter. So you know, if I had invested $100 for the day, I would have made 25 cents on it. So you made it's not that bad for the day, right? But and so let us see. So if I made $70 per day, right? 70 times 5. That's $350 times 4, $1,400. Right? Alright. So let us see how this goes. So the key thing is to be consistent, try not to lose, and don't get in any boneheaded. Wait until the market confirms, right? Enter your point, pay attention to your points of entry, and wait until the market actually goes in the direction. Don't guess, wait until the market goes in the direction that you think it's gonna go, and then you enter, because I think one of the second to last trade that I made would be here, which would be the buy trade. It was done here. The market was in a state of indecision, which is what you see right here. It was indecisive. When you zoom in to 1 minute, you see literally, you know, it's indecisive right here, right? So you know it's compressed, highly compressed. You're gonna have some movement, some type of movement. In my head, I was, you know, it's gonna continue. However, what I should have done, so I was on a 1 minute chart. Come out to my 5 minute chart. Wait for the decision to be made. Once the decision is made, then I would go back to the 1 minute to do what I need to do. And also, if that decision is not confirmed on the 1 hour chart, you know that you're in and out. Right? So it's just in and out, in and out. Right? And that's the other thing too. We had looked, when we started the day, we looked at the daily chart and we saw that the ADX trend indicator right here, the green line, we're seeing that the likelihood of a trend is very low. So on the daily chart, it's saying that this will not be having a big movement. Alright, so you take that into consideration, move to your hourly. Alright, trend is very low. So it's in and out, in and out, in and out. So all along, seeing the trend is very low. Having movement, but the trend is going to be very low. So it's in and out. You're not going to be doing anything and holding. Right? And so we have to take that into consideration. Now, what do I think? This is the first time using this live account, live trading, as compared to I've always been using the demo. Obviously this is hot Forex, right? HF market. The difference that I've noticed between the demo and the live trading, the live trading is slightly laggy, right? It's not as fast as when you're doing the demo. So in everything, right? So the trade signals, the candlesticks are fine in terms of the movement and everything, but when you're entering or when you're exiting, right? So when you want to come out of a trade, you want to enter a trade, you're moving in stop loss and so forth, everything is a little bit laggy. So that is one of the major differences I've seen. Also, I think I've noticed, I guess, based on the fact that not seeing any commissions here. When I look at the, I didn't see any commissions, but nonetheless, there's also a slight difference when you see the in terms of the cost of the trade, obviously, because I mean, obviously now, you know, there's a slight difference I noticed in the cost of the trade. So pretty much, for example, you enter the trade and new entry in terms of trade will be shown by the adopted green line. So normally when the candlestick, well, I think in general passes the green line, then it normally goes to zero and then it goes positive. But sometimes it passes and still negative, and then eventually it will go to positive. But it is what it is. So it's just to relax a little bit, because it's easy to lose your money, right? And in little ticky-tacky trades. So let's try to get away from those things and focus on the strategy and just work the strategy, right? So all in all, I think it was an average day, and we'll just continue to see what's happening. One of the other last observation I think I can make, when trading the news, sometimes it's better, right, to trade after the news has passed, because it's very volatile. So although and it's very risky to trade the news, so although you can make the money, which, as if you watch the other video, you would have seen here where this thing was moving fast, so fast, right? So even though I was in the 1 minute, this thing was really moving, and your stops has to be high, and it can stop you out, because it can easily, even though your stop is high, it can stop you out because the movement is very volatile, right? So it can hit out that, and it's still going in the direction that you thought it was going to go. All right. But one of the things I've noticed is that oftentimes, if you have very large movements during a news, there's non-farm payroll or whatever it is, right? But generate some volatilities. You can wait a little bit to watch if it's going to retrace itself. When the market does calm down, and that's the time to get your stuff going, and it actually did this, right? So if even though you messed up right here and you were still brave enough to just pay attention to the chart and just have some dedication to the chart, eventually the market calmed down, and you could pretty much get almost most 3/4 of the trade back that you would have missed right here, okay? So it was just right here. It was very volatile, but after it calmed down, wow, see, so there are tricks to this thing. So patience is key, right? So that every flash you jump at, wait until this thing is really confirmed and then you do what you need to do. Alright? So, as I said, I'm gonna give it today B average, and just hope calmer heads can prevail as we go along and we follow the strategy, right? And let us see how this thing goes, because ultimately, it's hard work, but I love it. So it's not gonna feel like work, right? But ultimately, you want this thing to produce, right? So nothing is better than doing your own stuff, right? And this is it. So we have practice, and we have practice, and we have practice done a lot of demos. This is a real deal. And let us just take it smooth and build as we go along, right? So right, so let's leave it at that for today, and I think either Monday morning or Sunday night we might just take a look at the market to see what's happening, and then we'll do another vlog, and we go from there to see what's happening. Alright, so peace out, guys. Definitely subscribe to the channel, and definitely turn on your notification. Share with your friends, right, as we go along this journey. Alright, so have a pretty good weekend, and we'll be back at it definitely next week. Alright, take care, guys.